It's Monday, June 29, 2020. The National Association of Realtors got a lot of headlines this morning with the release of their May pending sales index, which they announced spiked 44% last month. If you've been watching these Altos Research videos over the past few months, you've obviously seen that coming. May was a long time ago, though. And at this point, we're focused on July. In the coming months, the pending sales index, the NAR number, will actually be difficult to keep up with the current pace, not because demand weakens, but because supply is so severely constrained. We like to say you can't use sales volume to gauge real estate demand when you're in a supply constrained market. Sales would be much higher if there were anything available to buy. That said, let's dive into this week's numbers. We are past the seasonal new listings peak. The homes that people want to sell in July are really already on the market. So we had only 70,000 new listings this week. That's 22% lower than last year at this time. You can see in the bottom chart here that normally each week of the third and fourth quarter generally bring us less and less new supply. And of course, so we are starting that seasonal trend now. As a result, though, we are at record low total inventory, the top chart, right end of the top chart here, when we're normally approaching our annual seasonal high. So the green dots are where we are normally. This is year over year changes. So we're 30 to 50% fewer homes available than normal. So only 676,000 homes for sale this week. In the face of strong demand. So people want to buy homes, there's just not enough available for them to buy. The median home price is at $350 at the end of June 2020. So typically in these weeks of summer, home prices are holding steady week over week. Prices start pulling back near the end of July into August when price cuts start happening. They want to sell before the fall and school starts and those types of things. But what we can see here is that we really have these high levels of organic demand in the market that is keeping a support on prices. The new listings cohort, this is the green line in this chart, would normally be pulling back each week as we go into July and August, and you can see the year over year bubbles showing where we normally are. But this year, that demand is keeping the supply, the pricing supported. As you know, the sellers and their agents are really this marvelous wisdom of the crowds example. Like they know exactly where the buyers are. And so we don't yet need to pull back the pricing on the new listings. That'll happen sometime in the coming weeks, though, as seasonality hits. Also, as the demand keeps a support on prices, our year over year comparisons will start to improve. Right now, the market is up 3.2% over last year. But if our pricing this summer stays steady, while in previous years it started ticking down, our year over year improvement is going to look better. This week, we will be doing an hour-long webinar on Wednesday, July 1. We will have time to dive deeper into the data. We'll be looking at like the leading indicators are telling us about the second half of the year. We'll spend more time also with our realtor clients, exploring the powerful communication strategies with home buyers and sellers in this market. I'll put the link to register for the webinar in the comments below. And by the way, if you're watching and you have questions about the data or how to process what the heck is going on out there, leave those in the comments below too. We will try to address them in the webinar or in future weekly videos. That's it for now. We'll see you on